Hello traders, Rich here, and here's a quick but detailed update on gold. As usual, if you guys like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, gold has been overall bearish for a while, making lower highs and lower lows, so we are bearish from a medium term perspective. But if we zoom out, we can see that this bearish trend is simply inside this big range between the 1700 and the 2.1k, and price is currently approaching the lower band. Just like previously, a bearish trend rejected the lower band 1700 and then traded higher, so we're expecting a very similar movement. That's why we are looking for buy setup, especially that we are inside this horizontal range, and the 1700 is a strong resistance turn support. We've got multiple rejections from. That's why we'll be looking for buy stops, of course, unless we have a break below it. In this case, a movement further down would be expected till our next support zone. Gold would broke below the range, which is also a double top pattern, signaling a deeper correction. If you zoom out, we can see it even better. An impulse, a correction started, and then an impulse, and we are currently here. If we break it downward, we'll be expecting further movement downward to the previous support resistance here and the 1500. So this entire support zone lining up with the lower brown trend line. Anyway, let's see the drawing. Sometimes I get overexcited, and let's take it step by step. For now, around the support, so we'll be looking for buy setups. If you zoom into H4 time frame, we can see that the latest bearish trend we saw is engulfed with this channel. Previously, we were bearish. The bulls took over, traded higher, then bullish, higher highs, higher lows, and the bears took over, we traded lower. So we're following the same logic. For now, this is our last major high, lining up with these lows and also with these highs and lows, right? Resistance, support, and now acting as a resistance. So for the bulls to take over, we need to see a break above it. In this case, a movement higher to the 1750 would be expected. And for those who know me, as per my trading plan, I'll be waiting for a new swing high to form here, and then we'll consider it our trigger swing, which is also might be lining up with this upper one. As mentioned previously, if you want, I can extend it again. Okay, I'm not being able to catch it. Yeah, here we go. Okay, when the buy is activated, the stop loss will be below the previous swing low, which is also lining up with these lows, and we target a 1 to 2 ratio. Keep in mind that we've got a resistance here, so if we trade higher and we see any kind of rejection, we can close our buy around 1.2, 1.3 R. Of course, if it's broken, then we'll be expecting another bullish movement till this support and resistance. As we can see in blue, that price previously rejected. It was also a supply zone, as we had an aggressive movement downward from it. Let's read these drawings here as well to keep it clean. Meanwhile, and until the bulls take over, we can still trade lower and lower. In this case, we'll be updating our trigger swing. We'll delete this one and we'll be placing it around here. Okay, so basically we are waiting for a new swing high to form around the upper orange trend line and a break above it and above the trend line to signal a shift in momentum from bearish to bullish. Meanwhile, of course, we are bearish. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, NZDCHF has been overall bearish for a while, making lower highs and lower lows, trading inside this falling, broadening wedge. However, we are currently approaching the lower band, which is this brown trend line, acting as a non-horizontal support, or in my opinion, as an oversold area, and also this horizontal support resistance because we had multiple rejections from it. So we'll be looking for buy setups. If you zoom into daily time frame, we can see that lately we have been stuck inside this range, so we'll be trading the range upward and downward until eventually it's broken downward or upward. But for now, Since we are around the lower bound trend line support zone and the lower bound of this range, we'll be looking for short-term buy setups on lower time frames, of course, unless it's broken downward. Then a movement to the next support zone would be expected around 0.575. So, but for now, let's take it step by step around the support. So while looking for buy setups, if you zoom into M30 time frame, we can see that we have been bearish lately, approaching the support zone, trading inside this big range. So we are looking, as mentioned, for buy stops. So as per my trading plan, I'll be waiting for a new swing high to form around the upper trend line. So it can be here or here, but anyway, for the projection, let's do it like this to consider it valid. And for those who know me, I highlight it as our trigger swing in gray. Okay, and that would be it as our trigger. When the buy is activated, when this happens, when we have a break above the last major high and the trend line, which is now showing us the overall bearish movement, we want this reversal. So when we have this break and the break above the trend line, at the we enter the buy, and the stops will be below the previous swing low, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective, which would be around the previous highs from this short-term range. Meanwhile, and until NZDCHF, until the buy is activated, we can still trade inside the channel before breaking it upward. In this case, we'll be updating our trigger swing, or we can still trade lower and lower and break below the support. In this case, we'll be looking for sell setups on the retest. That's it for NZDCHF. Best of luck, and I'll see you on the next one.